All right, good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, so we came on yesterday, we came on earlier this week, and we talked about how, this is a continuation chart. I think I had the front month up yesterday. It's the same damn thing. The theme is the same. The inability to break the 9-day and the 20-day here. So can't get it done, go to the upper band. Can't get it done, not quite go to the upper band, fake everybody out down here, then go to the upper band. Can't take out the 9, go to the upper band. Spend a few days down there, go to the upper band, bring it back, glide it in, can't get it done. New all-time highs, over 5,300, and go to the upper band. The reason why we continue to make all-time highs is because of the continued inability by the tape, by price, to convert that 20-day from support into resistance. And until that happens, this is going to continue to happen. I told you yesterday morning, I'm telling you now. So, they came out, they did the Fed, they brought it, the pre-FOMC price was 52.3675. The low of the reaction range was 52.36.5. The hinge price that we identified almost immediately after it hopped up to 60 was 47. So the whole deal was 47. 47 back into 41, and they couldn't get it done. They couldn't convert 47 to resistance. So, we had a couple shorts that worked out, had some longs that worked out. We're still on a long from 45. That's working to the upside with the runner. But the theme is, to all of the weak shorts, the shorts that add, the put holders, the call sellers, and everybody in between. The reason the thing keeps going up is because in the big moments, when you have to take out weekly pivot in the 9-day, you can't keep it converted. So how many bites at the apple do you think you're going to get? And this has been going on for months before they just say, okay, well, they can't do it. I don't want to get left behind. And they take everybody else and they squeeze them to the moon and off you go. So there you see the pre-FOMC price. The band's tightened up right before the announcement, which they always do. One of my least favorite days to trade is any Fed day before 2 o'clock. It's awful. We did a little bit in the morning and then we just sat there. Just like see at 2 o'clock. It's not worth it. There is plenty of volatility going on after. You don't need to churn and try to game the Fed and guess what's going to happen before, because typically you're going to be wrong. So the high of the moment is 43.1575. I'm surprised how comfortable it is trading above 5,300. And we battled with 5,200 for quite some time, as early as Monday. And now we're up in 53.15. We got today and tomorrow. I'll be curious to see if we close today with a 53 on it. If we close today with a 53 on it, we have this term that we've used for several years called a quick 100. Every once in a while, the E-mini wants to put in a quick 100. You say, okay, 5,200 to 5,300 is pretty quick. I agree. But when we talk about a quick 100, it's quick 100 into new territory. So we're in blue sky up here. It's all-time highs, which makes it very hard to get into new long trades, even though there are definitive support areas that you need to be buying against. Because the thing that tends to creep into people's brains is, we're at all-time highs. It has to come down. It doesn't have to do anything. The mentality of it has to come down is how you got yourself into this mess in the first place. I know, it had to come down at, 51.10. It had to come down at 51.30, and so on and so forth, and off to the moon we go. And, you can adapt, or you can just add, and then you won't have an account anymore. It's up to you. I think, what we talked about yesterday was the dynamic of Sure, you can be short for a trade, but when that short's not working, for example, yesterday during the Fed at 47 and 41, when the short's not working, you need to adapt. Say, screw it. I guess it wants to go up. I want to make money more than I want to push my ideology that, the market should be doing ABC. Well, it doesn't want to do ABC. It wants to do DEF. So why don't you go ahead and do DEF and make some money? That has to be your mentality. That risk and consistency will build your account. And it was very true yesterday. That thing had no desire to trade past 41 yesterday. They tried. Post-Fed. So where are we at today? Well, we're living in the 5300s, like it or not. You got the proprietary moving average and volume weighted average price are locked in at 5306. I think we go back to the roundy during RTH. The question is, do we convert it? You're going to start to see that 5-minute mid-band. You can see it there on the hourly chart, rapidly reaching up to meet price. And you got a 1575 all-time high. I don't know. It's always hard to gauge up here what it wants to do. It's, you're much better off identifying where is support, where's the area that if they convert, then I can try a short. You're much better off doing that and trading that lower high down into something lower than trying to guess which high is the high. Guess being the operative word. Because since we're up here in blue sky, we don't know what the high is. But if it starts making lower highs, that's something you can get involved with. At least you have resistance. At least you have some type of a toehold on risk. But you have no toehold on risk if every time you're wrong, you just add until you're right. A lot of people have done that, and most of them don't trade anymore. Don't be that person. A lot of them running around this morning. Trust me. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. March Madness starts today. That's always a good day. Talk to you. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.